Welcome back to the channel. In today's video, I actually want to discuss the little feud between Robert Kiyosaki and Grant Cardone. And I want to do that not as a form of drama or gossip. I want to do that because both of these people have influenced me tremendously. So for those of you who don't know, who don't follow the channel, I own about $2 million in real estate, 24 units, and I absolutely wouldn't own those assets without Robert or Grant. Um, a little background, I read obviously Rich Dad Poor Dad, and then I read every single book in the Rich Dad series, and that was kind of the introduction to real estate. And then I came across Grant Cardone's channel, and a couple of years ago, he was doing it with his employee, his partner in real estate. He was called Captain Ryan, and they would do real estate shows. And in those real estate shows, he would actually analyze deals, the cap rates, how to get the debt, what a 1031 exchange is. And he would just run through it. And that was very helpful on my real estate journey as well. So it's interesting. It's almost like, seeing two friends of yours fighting or disagreeing and not really knowing what to do because you have an affinity for both. So it actually occurred on Robert Kiyosaki's show when he had Grant Cardone on. So let me just bring my screen down a little bit here, and let's go ahead and play this.
That's hard to be clear on our message here, Grant. Your message is probably different than ours, but to me, is the management of the property and making a turn of profit is the hard part today. The raising the money is easy.
I don't know how. I don't know that I'd say it's easy. We've raised $700 million. You still got to manage people, phone calls. It's not. When you say it's easy, it's not easy. Like, we do it with no ads, Robert. No, I haven't spent any. I think I spent 50 grand in ads for 700 million. No brokers, no middlemen. I still got to get a message out, right? So the hard part of real estate today for me is getting the deal.
Like, yeah, I don't agree with that.
It's even getting control of an asset. Like, when I'm competing today, we're buying a deal in Fort Lauderdale. It's $230 million. Like, who's going to buy that deal? It's a handful of names: AIG, Blackstone, JP, Goldman. Like, these are big monster trillion-dollar companies, not billion-dollar companies. And the thing they can't do that I can do is they cannot write a check the day they look at the deal. They can write a check for the whole amount 3 weeks from now. I can't close with all cash in $250 million, but I can go hard with $2 million today. And they can't do that because of their fiduciary responsibility. So these big guys that we're competing with today, like, if you can't move fast, you're not going to get the asset, as you know.
Yeah, Grant, hang on. Not too many people are going to do what you do. Our audience wants to know how to get started right now.
Okay.
So
okay.
Wait. Please be respectful to our audience, okay? Any comments, or Kim?
How did you get started?
Okay, so there you go. Please be respectful to our audience. So somehow I think Robert viewed Grant as being disrespectful to the audience. And my interpretation of this incident is that the Rich Dad channel and the Rich Dad show, it's targeting people who are novices or looking even to become novices, meaning, let's say they have a 9-to-5 job that they dislike and they're looking to sort of escape the rat race and get started in real estate and buy their first deal or two. And I think that maybe Robert interpreted Grant as basically going into a sales pitch for Cardone Capital, which is him saying, instead of buying your own deal, I've raised 700 million, just give me the money and I'll invest it for you. I don't know if that's maybe the interpretation, but that's kind of how I saw it there, what Robert was thinking. And I think Grant's point would be, like, don't waste your time with 1 or 2 units. He's a very big believer in going big, starting with 15 units, 30 units, 300 units. That scale is a competitive advantage, and that the 1 to 2 units, 3 to 4 units are sort of the crumbs in real estate, is the way he would say it. And then it's stuff that's been handed back to banks because on a couple units, you really can't afford a manager. So we'll watch the rest of the clip here.
Started, because you started with nothing as we did. How did you get started? How did you get into the whole real estate game?
Yeah, I got started with one unit, like the same way, like, and I'm not being disrespectful to anybody. I'm telling your audience that they're better off partnering with somebody on a big deal than going one unit by yourself, because the problem with one unit is when they move out, as you know, you're 100% vacant.
Okay, so hey, we got to go for a break. Look, I just want everybody clear on this. Grant recommends buying a large unit to start with. We do not.
So let's go over here now. So there you go. You know, Kiyosaki basically says it directly. Grant recommends buying a large unit to start out. We do not. So you see that conflict of Cardone saying go big, look to big deals, and Kiyosaki saying look at those 1, 2, 3, 4 units to get your feet wet in real estate, to learn how to manage a property. They both kind of agree that management is very, very important in a situation. And I know that perfectly as well. In my 24 units, the first manager that I had there was like stealing, was on drugs, was getting all kinds of information, had so much. Once I brought in a management company, everything changed. The property turned around, and the success I've had is due to that management company. I think Grant Cardone's point might be, I have 24 units. If you had a 2 or 4 unit, you wouldn't necessarily have the money to justify bringing in a management company. But because it's 24 units, because it's a bigger deal, I mean, that would still be a small deal for Grant, but it's a bigger deal overall. You have the luxury, so to speak, of bringing in a management company on that. And so the next video is actually a follow-up. It's with a guy I really like, Alex Hormozy. He's kind of started his YouTube channel. He does a lot in the fitness space. He started out, I think it's like a gym marketing. Like if you open a gym and you're looking to get memberships, that company can really help you get started. And then I think he's looking to Grant for mentorship on growing wealth. And this is an excellent interview. And this is the part where Grant addresses the Kiyosaki interview.
So this is, I was on a call yesterday with Robert Kiyosaki, and Robert's like, why do you keep telling people to buy big deals? I'm like, why do you keep telling people to buy little deals? This is my show, respect me. I said, oh, okay, I know it's your show. And because you invited me to your show. So we all know it's your show, Robert. But the point is, Robert, like, just because you think 2 units and 4 units is somehow the holy grail, 2 units and 4 units don't come with managers. You just finished telling me that management is the hardest damn part. And you keep talking about management being the hardest part, literally telling your audience not to buy real estate, because how can I manage real estate when I can't even manage my own life? I got kids, I got a job, and now you want me to manage a 2-unit deal. He's like, well, what do you do for managers? I said, I buy 500-unit complexes, 400-unit complexes. This deal behind me is $230 million. One deal, 16 employees come with the deal. So when I buy that deal, I have built-in leasing agents. All of them stay with me. I have mechanics on the property. One of the reasons I've avoided Nevada as a real estate.
So there you go. I think Grant's point is when you're buying bigger deals, you're going to be able to afford the luxury of management, or on a big deal like that with 240 units, you're going to have built-in management. And that's just not the purpose. I think Kiyosaki is saying not everyone can do what you're doing, Grant. I think he's looking for people in the Rich Dad channel who are just looking to get started. And Grant is kind of like, don't waste your time on the 1 unit, 3 unit, 4 unit. Don't think small, think big, because scale is a competitive advantage. Scale allows for management. So it's just a conflict of philosophies, really, between the two. Both have done very, very well. So we'll watch just another minute here of Grant.
Place to buy apartments is because I have to compete with Steve Wynn's hotel for mechanics. Okay, so what I want to do is I want to buy big buildings, 200, 400, 800, 600 unit, big buildings, big. And for your audience, it's like, I don't have that much money to buy that. Yes, you do. You need to find people that you can partner with on big deals, great locations, and quit settling for the crumbs. It goes back to your second thing that I told you in when we met. Focus on big opportunities.
Yeah.
And 2 units can only make so much money. If the rents go up $100, that's 2 times 100. It's $200. Nobody's going to change your life is not going to be changed over 200. You change the rents on that thing by 200 times 456.
Yeah.
Then all of a sudden everything changes for everybody.
Right, and your cap rates on those are great. So that $200 increase goes very far.
Yeah.
So what?
So there you go, Grant Cardone. Focus on big opportunities. Let me say it again. Focus on big opportunities. That's in direct contrast with Kiyosaki's view here. Get rich by staying small. I remember seeing on a Robert Kiyosaki, I think Rich Dad channel, he talked about the benefits of staying small. He talked about being in the military. He used the term fire team. He would get his fire team, and that was a competitive advantage in a war by staying small. And he kind of used that in real estate and in business by being sort of under the radar and with 4, 5, 6 people. Your CPA, your property manager, your loan broker. You can really do well that way as opposed to trying to build this big entity. Here's a video here where he talks about this philosophy again, which is in direct contrast to Cardone's thinking. Big opportunities, big pieces of real estate. 100 units, 200 units, so on and so forth.
Why staying small is the next big thing for businesses. For those of you who just want to be rich or financially free, you don't really have to be big to be rich or free, right?
Yeah, and what Paul is saying, and it's a very different take on things, is he said one of the keys to failure is growth. And people think they have to grow this big business, and we know a lot of people who have come and they said, oh, we're going to create this huge business and it's going to be worldwide, and they haven't even taken the first step yet. So basically what Paul is saying is start small, which is what we always say, whether it's investing or business, is to start small.
Yeah, and the big question is how much is enough? Because I think the reason Kim and I are successful is we always started small. We actually stay small.
Kitchen table.
And we do keep doing the same thing, but we don't ever try to get big. We got big, but I think we got big by staying small.
We did. I mean, our core group is very small.
Yeah.
And then we license out.
So for those of you who think you have to start some mega company or make millions of dollars, that's not really true. So this is a very, very good book. It's Paul Jarvis, coming up on Rich Dad Radio. Go to richdad.com, right?
Yes, and I'll just tell you one interesting statistic, one study that was done, and they found that of the Inc. magazine's fastest growing companies, 2/3 of those companies are out of business in the next 5 to 8 years. So the whole word is growth, 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 growth. Everybody thinks you got to grow, 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 grow. And what Paul is saying, not necessarily so. Really rethink that idea that you have to be big.
Or for ordinary people, that you have to make a lot of money to be rich. That's not true either. I mean, Kim and I tell the story of when we met one of our partners, and that partner thought we were really rich, and we said, no, we only make $120,000 a year. Now I know $120,000 for a lot of people is a lot of money.
Without working.
Yeah, but it's $120,000 without working and not paying taxes. But she was so appalled because she thought, to be rich, we had to be making $1 million a year. And all we did was start small.
So there you go. That's a great place to stop and comment. Cardone, focus on big opportunities. Kiyosaki, stay small. That anecdote there of $120,000 a year passive. It gets into really the philosophy of wealth and the philosophy of creating a lifestyle and a life. And so the question is, would you rather have $120,000 passively from real estate with no job, or would you rather make $900,000 a year, $1 million a year base salary, working at Goldman Sachs or Bank of America or whomever? Meaning, would you rather have the hustle bustle, the go, 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 get up from the alarm clock, get in the shower, have a few sips of coffee, run to your job, collect your W-2, and make 8, 10 times what someone is making passively? Again, would you rather make the 120 passively, or would you rather make the million actively? And again, I think there's no right answer there. It depends on your temperament. I mean, I know for me, the way I think is, I think freedom above all things, essentially. I think independence above all things. So for me personally, I would rather have 120 that I controlled, that I owned, as opposed to a higher paycheck from a corporate entity. And I think that kind of gets into the idea of the Great Resignation, the FIRE movement, so on and so forth. But that's just how I'm wired. In fact, the reason I can make this video at 11:30 on a Tuesday, I'm actually wearing pajama bottoms with this, is because I don't work for anyone. I don't collect a paycheck. The way I've structured, by learning from Kiyosaki and learning from Cardone, is I use my real estate for cash flow and income, which then allows my stock market investments to continually compound. I don't need to actually pull dividends or pull option premium or pull anything from my stock market holdings. It allows me basically to not have a job, and I feel that's one of the most beautiful things in the world. I know that's sort of the anti-Protestant work ethic. Maybe some people view it as even anti-societal. But I just view the luxury of not having a day job as the greatest luxury of all. And this is my opinion. You might completely disagree with it. I know Joe Biden does. In the video I played on before, and this isn't like a political statement. There was a video when he spoke, he talked about his father, and he said, his grandfather said to him, Joe, a job isn't just about a paycheck. It's about dignity, self-worth, your place in the community. I disagree with that completely. Freedom and independence from a job, to me, is the greatest luxury, the greatest pursuit. Different opinions. So we'll watch another minute here, just finishing out what they say, and then that'll be it for today.
And we stayed small.
Yeah. And our goal wasn't to make millions. Our goal was to be financially free.
Yeah.
And a lot of what Paul is saying is about people being free, is about you having the freedom to choose what you want to do in your life.
Right. So I know 120,000 sounds like a lot of money for many people, especially just starting out. But we never got bigger. We just kept doing the same thing, and now it's in the millions.
Yeah.
But we stayed small. We've never lost money in real estate. We've lost money in business, but not real estate. But we stayed small. So it's very important to understand, because this person was shocked because she and her husband make 2-3 times more than Kim and I make. But I said the difference is we don't work for that money, and we don't pay taxes for that. But in her logic system, is you had to make millions to be rich. That's not true.
So we recommend Paul Jarvis's book, Company of One, Why Staying Small.
There it is. It's a good way to finish it. And then Kiyosaki talks about it there, of that person that said, well, you're not rich, you only make 120,000. Kiyosaki might argue, well, I'm richer than you, making 120,000 passively without work, very low tax or no tax, than you who's in a cubicle all day, 80 hours a week, 100 hours a week, making $500,000. So again, just different worldviews. Tell me your thoughts on it. What pathway you think is best, and what you think about the Cardone and Kiyosaki. And I think, again, I don't think it's necessarily anything personal. I just think they have different worldviews regarding real estate and regarding life there, and they've both obviously been very, very successful in the game. And there's different ways to skin a cat, so to speak. So anyways, guys, that is it for today. Thanks for watching. Ciao.